The move could spell a return to the spotlight for the bombastic Vice Media co-founder Shane Smith, who held the role as CEO of in the company's heyday, including being valued at $5.7 billion. All right, so first off, the first thing I want to point out to you is this is Finance 101. This is Finance 101. And why do I call it that? Well, because this shows you that economic conditions change, and they can change very rapidly. They can change just like the weather. When the market was doing really well, there were some people that would not listen to people like me at all. That was because they came in, they thought they were stock market experts. They thought that everything that was going up could never go down, that it was going to just keep on going up. They would look at these lofty valuations of everything from crypto to NFTs to stocks to whatever, and they didn't understand the downside. And so what you're seeing now is you're seeing the downside and the dark side. You're also seeing in real time how people like George Soros get rich. You're also seeing why people like Warren Buffett are very, very conservative. Warren Buffett is super conservative for the same reason that your great grandma was very conservative, because your great grandma has probably seen financial challenges that you can't even imagine. So she is going to go to the grocery store and pinch pennies. My wife talks all the time about her um about her grandma, and how she would have thousands of dollars in the bank and have hundreds of dollars in her purse, but she would still get mad if the peanut butter was $1.30 instead of $1.15. Like it was like that. And that's because her grandmother has seen the good and seen the bad. She's seen the boom and she's seen the bust. Same thing with these OGs, the Warren Buffetts and the George Soroses. And so that's one thing, right? But then the second piece of that is that this is how these guys get rich. What they do is they wait for the suckers to go running into the fire. They look at the market. They say, "Ooh, everything's overpriced right now. This is crazy. Who would pay that much for this?" Right? And they just sit back. And you know what they do? They sit on cash. Warren Buffett sits on about $170 billion in cash at any given time. $170 billion, and he's just waiting for situations like this. He's waiting for somebody to put themselves into a bad financial situation, and then need the money. And then at that point, all the negotiating power is in your favor. Jamie Dimon, who runs Goldman Sachs, he benefits tremendously. His Goldman Sachs benefits tremendously from the banking crisis. They were able to acquire First Republic Bank for pennies on the dollar. And it's not because First Republic Bank is worth less or that it's a crappy bank. It's a great bank. It's just they're having a tough time. Right. So timing in finance is everything. When I talk to you guys all the time about how time is money, and literally this is mathematically true. When I would analyze financial equations to determine what the value of an asset is, it takes lots of calculus and all that. Time was always a variable in there, because timing is everything. The amount of time when something happens, right? Being able to survive a downturn, right? All these things are extremely important. So what's interesting about Vice and BuzzFeed having the struggles that they're having now is that they made one fundamental mistake that you should never make when it comes to your businesses and investing, especially when you're black. When you're black, you got to be twice as careful. I'm sorry, I just believe that. I think that we have a tougher challenge than these companies that just got flooded with money. When times are good, you prepare for when times are bad. When times are bad, you prepare for when times are good. So George Soros, by buying Vice when times are bad, when they're struggling, is preparing for the fact that, he's got enough capital such that when Vice gets back to its old glory, he's going to make several $billions. But then when Vice was worth 5.7 billion, they in BuzzFeed, I think BuzzFeed's CEO apologized. He apologized. I'm gonna go look up an article. BuzzFeed CEO apologized to his staff for not selling the company when they were worth 10 or 12 billion dollars. He said, "I am so sorry for not taking that deal." And because now he can't get that amount. Now I think BuzzFeed, they had to shut down their news division. BuzzFeed is fighting off bankruptcy. And these are two companies that were high flyers. They were killing the game, right? And I just really think that this reflects something that is promoted in capitalism called greed. Greed will get you in trouble every single time. There's a documentary on YouTube called Boom Bust Boom, or it was on Netflix. It was called Boom Bust Boom, and what they talked about was how this sort of highly leveraged form of capitalism, what it does is it creates booms and busts. You rise high, it's like financial crack. You're gonna go super high, but then when you crash, the crash is unbearable. So effectively, when I saw the financial struggles of Vice and BuzzFeed, both of these media outlets that I really admire, kind of really struggling the way that they are. There is no reason that BuzzFeed should be having these financial problems. And also, what's interesting is that the problem is not sort of having a bad business model; it's cash flow. That's it. They just don't have enough cash to keep things moving, when the ad revenue drops. So, and this is typically caused by taking on way too much debt. It comes from taking on way too much overhead. You have to watch these things when you run your business. And so when I say that things apply doubly when you're black, well, a lot of y'all don't have the same extra money that Vice and BuzzFeed had. That's another thing too. Relates to something in finance. We call that the free cash flow problem. That's a real financial theory. There are thousands of research papers written about the free cash flow problem. And what the free cash flow problem basically says is that when companies have too much access to cash, they waste the money. They buy stuff they don't need. They get think about how you used to feel. Maybe when I remember when I was a teenager. Tell me if you've ever felt this way. Anybody remember back in the day? Maybe you get your paycheck from Wendy's or something or wherever little raggedy job you might have. I've had all the raggedy jobs. I worked at Wendy's. I worked at Taco Bell. I worked at this place called the Hungry Pelican. I worked at Arby's. I worked at Hardee's. I couldn't get on at McDonald's. I tried though because I heard they was paying like $3.45 an hour, and my other job was only paying $3.40. And I'd have been there. I've been there, done that. In college I made my money by tutoring. That was my first taste of entrepreneurship. Was well, actually not my very first taste, but it was one of the tastes. And I remember just these white kids didn't do their homework on time, and they would wait till the last minute. So I would basically like charge them $5 to do their computer science homework or whatever. I mean, back then it seemed like a lot of money. But anyway, has anybody known that feeling where you get your little paycheck and you go cash it and you get that big wad of money? You have like a big wad of money, nothing less than a 20. So you feel like the dope man, a big wad. Remember that song, big wad of money, nothing less than a 20. If you want a 50, the dope man got plenty, right? So you got a big wad of money, nothing less than a 20, and you're feeling rich. You're feeling like you're on top of the world. You are feeling this high, right? You're feeling powerful. You're feeling like you're big balling, right? You're going out and you're like, oh, but it's only $3, or here's a 20, right? I don't know if anybody else has ever done that, but I've seen that happen, and that's what I used to do. And then what happens is that the money would just dwindle away, dwindle away, dwindle away. Next thing you know, you're living paycheck to paycheck. You need to go back to work because your money supply has run low again, right? And part of the reason that your money disappears so fast is because money is a drug. It's scientifically proven. It affects dopamine, your dopamine receptors, and all these other things that cause you to feel that euphoria, that overconfidence or whatever, right? So a lot of companies do this on a very high level. They get access to tons and tons of cash. BuzzFeed and Vice were able to get access to the capital markets at a level that no black-owned business could ever get. I don't know any black-owned businesses that could get access to the kind of money where they could go out. Imagine if you could go out and borrow $100 million or $200 million to build out the staff of your business. Imagine the Black Business School could go get $250 million to really expand nationwide. Oh my God! I mean, we'd be doing so many more things, right? And so they had access to all this capital, and then what occurred was they took on all this overhead. And they took on all these expenses and all this risk. And not to mention the fact that debt has an interest rate typically. The interest rate was low, but servicing all that debt can be difficult. So then next thing you know, you have a strong, powerful, healthy, revenue generating company with a good business model, good people, good decision makers. Everybody's doing everything right, but still you got to shut the doors. There was another company, I want to say it was called GigaOM. GigaOM was in that same category. Giga was a guy who became like a darling of Silicon Valley. This is where some of the economic racism occurs in America. They can go into Silicon Valley and get all this money that most black business owners can't really get. And he got access to all this capital, and the company was doing great, making I want to say like 40 million a year or something like that. And then one day he just declares bankruptcy, and people are like, what are you talking about? What happened? And all your employees are all pumped up about the next project. They're all involved. They're like, why do I not have a job now? I don't get it. Well, because behind the scenes, he had put himself in a situation where your company might be 8 feet tall, but you put yourself in water that's 8.5 feet tall. So what matters at the end of the day is, does your revenue cover your expenses? Does your revenue cover your expenses in a way that creates safety? So one thing my wife and I do is we're very, very proud of the fact that we do our best to live below our means. I met a neighbor who was whose parents were a friend of one of our kids, and and he came by and he said, man, I couldn't believe Dr. Boyce lived in my neighborhood. He said, I figured you lived somewhere. I thought you lived on a hill in a mansion somewhere. I said, no, we just live right here in the neighborhood. And that's basically because we're not trying to impress nobody. We're not trying to stretch nothing. We know that when times are good, they can always go bad. And what you do is you prepare. For a good investor prepares for the rain when the sun is out, and then you prepare for the sun when it's raining, right? And because eventually, the rain is going to end, so you don't get too caught up in that. But then you also know that eventually the sunshine is going to end. So let me read a little bit more about the whole BuzzFeed thing, and then what I'm going to do is answer some of your questions, because I know you guys have questions, but I really wanted to talk to you all about this, because this is really important investing information. And also one thing, my friend Lamar Tyler brought this up, and I agreed 100%. Is sometimes companies can grow too fast. A lot of people think that growth is a good thing. Well, the problem with growth is that growth costs money. Growth is like having a baby that's growing super fast, but the baby's going to eat up a lot of food. And so if my wife I'm the bonus dad of a kid who's 6'8", and anything we put in the refrigerator is gone in minutes. And so basically, just like the 6'8" kid that's upstairs in the house right now, this company that you have that's growing super fast, especially if it's cash flow intensive, is going to require a lot of money to sort of feed that beast. A Damon Dash, who was a friend of mine, who, a smart guy, he created all that Rockefeller stuff and everything. His stories about Jay-Z and all that were really interesting. And anyway, one thing he talked about was why he did not like the fashion business. And he did not like the fashion business, at least the way he used to do it, was, from my understanding, because the cash flow was so difficult to manage. You would have something that would just be super popular, it would just pop off and everybody wants it, but then you have to put out all this money to go and order this thing, this outfit or this design or whatever it is that people want. So you put all that money out, but then also a lot of your buyers are paying you on these like net 30, net 90 terms or whatever. So the money's not coming for a while, but you got to put out a bunch of money. So you have to get financing for that. And then if you order too much supply and you can't sell it, then you got to deal with what to do with this extra supply, and that cuts into your profit margins, and because you got to give discounts or whatever. So it's tough, right? So what I would encourage you to do, here's what I want. Here's the assignment I want for you. When you do investing or business, I want you to think as much about cash flow as you think about wealth and profitability. A lot of us think about income. We're trained to think about income because we're trained to go get jobs. And we've already broken that brainwashing. I hope that I've helped convince you that you were lied to, that there's many, many ways to skin the economic cat that goes beyond just getting your job. But in addition to that, so what do you think about instead? Well, you might also want to think about wealth, right? Which is an important long-term concept. But then you got to think about cash flow, because cash flow sort of maintains the wealth. Like I visualize, I have these weird visuals in my head. That's why I come up with these weird analogies, because I'm a very weird person, in case you haven't noticed that yet. And when I visualize wealth, I visualize like this big elephant, right? And then, but here's the thing. I think about, if I own the elephant, I gotta like feed it and wash it or whatever, right? I gotta do it like so. So in a way, I think of the cash flow and the liquidity as like having water to kind of wash the elephant, keep the elephant clean, and then the food for the elephant, make sure the elephant's fed, right? So I got this elephant, but if the elephant starves, then eventually somebody's gonna call animal control and they're gonna take my elephant from me, right? So when you have a business, that needs to be fed like that elephant. It needs the cash flow. It needs you to have working capital to keep this business moving and to take good care of this business properly. Because if you don't, then if you come up short, then the business will be in a position where somebody else might come along and take it from you. And then at that point, all the hard work you put in, goes out the window, right? Because somebody who was sitting there just chilling and waiting and saying, "Oh, he's got this big elephant. He can't even feed this elephant. He doesn't have any food put to the side. He doesn't have any water. He doesn't even know how to take care of an elephant. Oh, I'm gonna let him go ahead and acquire the elephant, and I'm gonna wait for him to mess up, and then he's gonna call me. He's gonna need my help, and at that point, I'm gonna say, well, I'll help you if you let me own 80% of your elephant." Right? And that's what the George Soroses are able to do. They just sit back in the cut, they wait, they say, okay, good luck with that business. No way on this earth George Soros would have bought BuzzFeed when it was worth $5 billion. He would never have bought it. But at 400 million, that's a bargain. You can get a $5 billion company for $400 million. Well, then you've solved the most important question in wealth building, which is buy low, sell high. Can you sell something or can you buy something at a low price that's really worth a higher price? If you can do that consistently, then you win. If you do that inconsistently, then you lose. The reason a lot of people lose when it comes to investing in the wealth game is because they do the opposite. They buy high and sell low. What does that mean? Well, when the stock market starts doing really well, then the media picks up on it and they start putting out all these headlines about all these companies that are just taking off and how much money is being made. And then that's when regular people do kind of pop along and say, oh, I'm going to start buying stock because everybody's buying stock and the prices are going up. That's what happened in 2020. So then you have people buying stocks like companies like Netflix or whatever for $500-$600, Zoom $500 or $600 a share. And then when everything starts crashing, people who know how the story ends, they were kind of holding on. They were either holding or they were buying more when the price went down. But then a lot of people who'd never seen that, who only think of investing as something that can go up, oh, they were running for the hills. People were financially traumatized with this most recent crash. I mean, it's very depressing. I was watching this Netflix show that I think everybody should watch. It's called How to Get Rich. Anybody watch that? My wife and I were watching that, and it's really a great it's really great for financial therapy, and because we developed the Black Financial Therapy Department in the Black Business School, we're really into the psychology of money and stuff like that. And one thing that a guy said on there that got my attention was he talked about he had $100,000 in his crypto or something account, and he ended up dropping that down to like 20,000 or something. And he was taking it very personally, and he was almost feeling like he had failed because his money had dropped. But the thing is that this is the way things happen systematically. Sometimes the whole market just drops. And then everybody feels like, oh my God, I'm not doing a good job. I'm not a successful man. We actually, my wife and I had actually done our podcast is called Pillow Talk, and we did something about a guy, a TikTok star dad who would have his kids on TikTok, and he was having financial problems and he killed himself. So a lot of times we internalize that failure. We feel like, oh gosh, I have failed. And really, it might be just an environment where everybody. It's like if I go outside and it is raining and I get wet and I say, dang, it's my fault that I got wet. I'm the only person who got wet. Everyone else is dry. No, everyone else isn't dry. Most of your friends who are outside just like you got wet also. So don't take it personally right now. If your portfolio isn't performing at the level that you want, that's a system-wide effect. On the flip side of that, you have to also make sure you don't engage in what Professor David Hirschleifer was on my dissertation committee. He's a very nice man. He talked about what they call self-attribution bias. Self-attribution bias happened quite a lot during 2020, where people thought that their portfolios were going up because they were stock market experts. So you would see somebody who had never invested before. They invest, a couple stocks double. Next thing you know, they're like, oh, I can teach you how to invest in the stock market. No, you can teach people how to buy stock, but you don't know anything about how this dynamic works. You just got on a boat and the boat was already going north and you went a long way and you think that you can be a boat captain. You're not a boat captain. There's not the reason people felt overconfident in their investing, and all the the Wall Street bets guys and the people getting on Robinhood were doing these crazy things. They were all super confident because everybody was making money. Money was everywhere in 2020, and now you're paying the price. Look at what inflation has been doing since that time. Look at where the stock market has gone. Like eventually, these bubbles always burst. But looking forward, the beautiful thing too about us talking right now is I can tell you that you're already seeing glimpses of market gains. Like you're already seeing, like look at Facebook stock. Facebook stock was a dog for a little while. I mean, they were making so much fun of Mark Zuckerberg and his whole metaverse investment and all this stuff. Oh my God! Does anybody else own Facebook stock but me? I bought Facebook stock when it was super low. I'm so glad I did. This stock has gone up 90% or 87% in the last like 5 months. 87%. That's crazy. That's insane. What's another one? Let me see. Another one that I really like was Netflix. Netflix stock is up. Let's see. Year to date, Netflix is up 13%. Okay, not as much as Facebook. I think it dipped a little bit, but it's up 92% in the last year. Netflix in the last year is up 92%. What's another one that I like? Chipotle. That's a good long term. I just like Chipotle. Great management, great company. All right. Chipotle stock up 50% this year, 49.06% to be exact, up 60% in the last year. So money is being made everywhere right now. It's already happening right now. And the beautiful thing about it that's making me excited, that's making me lift my voice, because my wife makes fun of me because sometimes I start yelling when I get excited, is I think this is the beginning. I think this is like the market still hasn't cleared up its issues. There are so many issues in the market right now that are keeping prices down. There's so much uncertainty. There's uncertainty about the debt ceiling. There's uncertainty about when the recession is going to occur. There's uncertainty about when the Federal Reserve is going to stop hiking interest rates. Once those uncertainties are kind of washed to the side and the Fed says, okay, we're done now, I think the market's going to start its upward trajectory again. So I can tell you that, that if you're going in there taking your extra money, grabbing onto some of these great American companies that just know how to make money, and even companies where you may not buy their product, like McDonald's. I know some of y'all would never eat at McDonald's, and I used to eat at McDonald's a lot when I was a kid. But as I got older, I started looking at I started getting more health conscious. I said, oh my God, I can't. Like, I feel guilty when I go to McDonald's now. But I don't care. McDonald's is a hell of a company. Well, I guess all those people that are still eating that food, they're putting money in McDonald's pocket, and McDonald's knows how to make money. Let me see. Year to date, McDonald's stock year to date this year is up 12%. The last year it's been up 20% over the last year. So not as much as some of these other companies, but there are so many good companies. So, and by the way, and I'm going to put another list again soon. So don't forget, as a member of the stock market class, if you log in at theblackstockmarketprogram.com, theblackstockmarketprogram.com, there is what Dr. Boyce is buying. So look for what Dr. Boyce is buying. And every single week, I'm grabbing these stocks and I'm putting them in there. I hope you've been buying them consistently already, because then you've been able to participate in the rise to this point. But if you haven't, I can tell you, I think that there's still a lot more upside. I think that we've had just a hard year and a half, and it was tough. We had to grind through it every single day. I really think the sun is coming out again. Hopefully there won't be any what they call black swan events. I'm hoping that something terrible doesn't happen. But for the most part, from what I'm seeing, I'm feeling really good about the trajectory of the market going forward for the next couple of years anyway. That's my assessment. All right. So let me see. Okay. So someone was asking about the Dallas event. Yeah. If you want to come to Dallas, it's May 19th. So I'll be down there for 2 days. Just go to boycewatkins.com. You can take a look there if you'd like to join us in Dallas. And then also the AI stocks. Just a reminder, I have that list of AI stocks that I like. I think I was listening to more content on AI this morning and I've constantly taken information about where AI is going. And it's just becoming like this arms race. It's actually interesting because, there's so many people warning that it's dangerous. Elon Musk is one of the people that's been warning that AI could just get out of control and I guess kill everyone or something. And then the guy at Google, who's considered the godfather of AI, is now spending his time warning of the dangers of AI. But I kind of feel like the cat is out of the bag. I kind of feel like it's just going to happen, and I don't know what to say about it. But anyway, from an investment standpoint, um, AI is one of those few areas where they're able to raise a lot of capital even in a bad market. Like, when ChatGPT kind of came out, it just changed the game. So now everybody's trying to catch up. So companies like Nvidia, which we've talked about Nvidia for a while, Nvidia stock has done really well from what I understand. Let me check it again. I'm not sure where it is right now. Let me see here. Nvidia stock. Oh, and by the way, some of you are asking, if am I going to go to other cities besides Dallas? I would, but I'm right now. My parents are sick and they need me, and I can't. I got to be with them. So I had to actually cut the cities that I was going to. I had to chop the list down quite a bit. So the convention though, I'll be in Atlanta on October 20th. So we can hang out there if you want. So yeah, I gotta focus on that. But yeah, Nvidia's stock has gone up almost 100% in the last 6 months. So Nvidia is, and a lot of that's driven by AI. I think Microsoft. Let me see what happened with Microsoft. I know they didn't rise as much as Nvidia, but I think Microsoft has done well. Let me see. A lot of the major companies did really well with their latest earnings announcement. So far this year, Microsoft is up 28%. The last year is up 16%. Let's look at one more. I think Amazon. Amazon's the one big company that's kind of disappointed just a little bit, but they're not doing terribly. Amazon's gone up 23% in the last year. And I was a little sad about that though, because Amazon was the biggest holding in my portfolio. And so even though I did make money eventually, I was still kind of saddened because I feel like they were also another company that overspent during the pandemic. All right, so let's see here. Tara says, who's picking up the tab on the debt of the U.S., GDPR, China, and Arabia? Who's picking up the tab on the debt? I think it's the American taxpayer. Now there are people that can buy the debt. So when we issue the treasury securities and all that, there is a lot of ownership in other countries. So other countries do have some ownership in U.S. debt for sure. So around the world, there's connections in terms of economics and stuff. They're and that's one of the reasons that I believe that the United States and China are going to think twice before they go to war, because the global economy is so connected that it's not like you can sit here and say, oh, we're going to go and attack them and hurt them, and it's not going to hurt us. It will hurt everybody. And so my hope is, I become Rodney King. Like, can't we all just get along? Now let's see here. Next question. Hold on for a second. I saw someone that asked about a discount. Are there discounts for the hotel room for the A, B, and C? Yeah, for the All Black National Convention, October 20th in Atlanta, Georgia, at the Marriott Marquis Hotel. There will be discounted hotel rooms. I'm trying to remember. They did not give me the link yet, but I'm going to put that link on my website, boycewatkins.com. Also, I will email that out. So make sure you're on the email list and stuff like that. And then also, if you go to allblacknationalconvention.com, there are discounted passes, and the discounts will end very, very soon. So if you want to go and get your pass now, you can get your pass, at a discounted price. What is a Azure? What is Azure? Asked Rarick. I think Azure relates to Microsoft, right? I don't know much about Azure, but let me see. What is Azure? Yeah, it's Microsoft's cloud services platform. That's what it is, and they make a lot of money from their cloud. Rarick says, do you know of companies that do vertical farming? And if you don't, what do you think about vertical farming? I don't know much about that industry. I could research that for next week. If you log in at the blackstockmarketprogram.com, leave your question. And I know I didn't get a chance to get to all your questions you submitted this week, but we'll do it next week. And I'll look up and see what I can find. Rain Pearson. Good morning, Dr. Boyce. Can you explain why stocks like SQ and PayPal have seen their prices drop this week, even though they beat their expected earnings per share estimates released last week? I don't know the specifics on those two companies, Rain, but here's what can happen, right? When a company releases their earnings. So a couple of factors come into play. When a company does an earnings announcement, it's not about how much money they make. How much money they make is not the issue. What the issue is how much did they make relative to what was expected. So if you are expected to make $2 per share and you make $1.99, then you did not meet expectations. That's a problem. That might cause a drop in your stock price. And it's not because the market hates you or the market's mad at you. It's that they're just reassessing they're just correcting. They call it a correction. They're just saying, oh, okay, so we thought you were better than that, but okay, fine. We're going to go and just change change your stock price to better reflect what we're seeing with these numbers. Okay, so exceeding the earnings expectation typically is a stock price booster. But the other factor that could be coming into play is what is the general economic climate, right? So if you release your earnings and you exceed expectations, but the market overall is down, they call that systematic risk. If the market overall is down and you're having a great day, that sucks for you because you might still be down because everybody's down, you know. And so that's another factor that might come into play. I think this week the market hasn't exactly been, strong and kicking and taking off, right? It's been kind of like, and so the third thing that may happen is when they release earnings reports, they do something called guidance. Guidance is where they say, okay, this is how much we made, this is how things are going, this is what we're seeing on the horizon. Companies are heavily incentivized not to lie or to fib or to stretch or exaggerate expectations when they give guidance. They have to be really honest. So like for example, Bud Light, was really honest when they said that, yeah, we were boycotted because I don't know if y'all saw the controversy. Bud Light did a campaign with a transgender influencer, and a lot of their hardcore supporters did not like that. They saw his picture on the can, and or her picture, whatever your politics are, they saw the person's picture on the can, and they didn't understand. People didn't understand that was just a specialized little can they just sent to the influencer. But people were like, wait a minute, I'm not gonna buy beer that has a person that person on the label, right? Because maybe the beer you drink is part of your identity. It's like, I'm not like, I don't know. But either way though, their sales dropped big time, like 20% because of that. And so they had to be honest about the impact of the boycott. They also had to be honest about projections going forward. You can't just go in there and act like something isn't happening, or you can't sort of lie and say you're going to make more money in the future. So companies will give guidance. So if a company says, yeah, we made a lot of money this time, but we're probably not going to make as much next time, then that will drop the stock price too. So sometimes the guidance can outweigh the result. Okay. All right. So Rain Pearson is also asking, there's also stocks that failed to meet their earnings per share expectations, yet the stock prices went up, like Live Nation. Well, same answer. I think the same answer applies. And Live Nation, I'm curious to see what happens with those lawsuits. That big Travis Scott lawsuit. Oh, that's billions of dollars right there. So it's going to be interesting to see how that plays out. Vince Washington, I'm $20 out of the money on Bill.com stock, and I bought puts around 95 for protection against the downside. Not sure what to do. I paid $1,100 to buy back the option I sold. Is this stock too hot to touch right now? I can't say for sure. Now, mind you, we're going to do an options class. We're going to gather the prime students soon. Right now, we're doing the options master class. So we got one more week of that. That's going to be on Thursday. But then I'm going to gather the prime students. We'll do a prime session. But let me see here. Let's see, Bill.com stock. I haven't looked at it for a little bit. Let's see, it's $98 right now. The last 5 days, it's gone up 29%. Okay, so yeah, I wouldn't say it's too hot to touch. I think it's a matter of I'm a believer in picking your investment strategy and just sticking with it, even when it's not the best strategy out there. It's like a basketball team that has a way of playing offense and a way of playing defense. You just gotta go like the Golden State Warriors. They got their butts kicked by the Lakers, and they were because Steph Curry was missing a bunch of threes, and the other guy was missing a bunch of threes. But they're gonna keep on shooting threes. They just had a bad night. So I think that if you believe in Bill.com, if you believe that's a good company, that company can generate good income for you from selling the stock options, I tend to just stick with that company. And now one other thing I've been adjusting though in terms of the prime strategy is I've actually started buying tighter puts, spending a little bit more money, adding a little bit more to the cost basis to get stronger put options, right? So there's one school of thought that says if the stock is 100 and I don't want a disaster, I might buy a put with a strike of 70. Lately, I've been buying puts like with a strike of like 95 or something like that, just because I don't like to see the equity value drop. But that was more so based on how I was feeling, even just managing my own portfolio. So yeah, I think whatever you are committed to, like I say, stay, keep being committed to it, diversify. I think that's really important too. All right, so let's see here. I rolled the option up and out to a further date. Yeah, that's a good way to deal with options. A lot of times, rolling over your options is a good way to keep from creating a taxable event. Like, right, if you receive income or you sell something, the IRS is going to tax you. So if you want to avoid that and you just want to keep the game going, then rolling up and rolling out, meaning changing the. Remember, those two things you can manipulate on an option are the strike price and the expiration date. So you can change those two things, get a different option, maybe end up putting up a little bit of cash. That's why you keep the cash to the side. That way you can make your moves when you have to, or you don't run into a what do you call it? Oh gosh, why am I having I'm having a brain fart right now. Hold on. If the word is going to come to me because I it's in my brain all the time. Margin call. That's it. Yeah. Okay, that tells me I need to get it out. It's about time for me to be done. But yeah, you get a margin call because remember in a margin call you either have to sell assets or you have to put money up. So the reason you have cash to the side is to put out the fire. You know, that's what they call liquidity because you use the liquid to put out the fire. And if you have no cash, like if you are leveraged to the hilt and all your money's invested and you're not liquid, that's when you can get screwed. In fact, go full circle. We started off this conversation talking about the economic problems of BuzzFeed and Vice. Why are they having economic problems? Well, basically, they got a margin call. That's basically what that is. They either needed to come up with more cash or they needed to sell their assets cheap. So as a result, Vice is about to be sold for about 1/10 of its original value from a couple of years ago. So the same thing happens with your stocks. If you are over leveraged and you don't keep any cash to the side and you let greed get the best of you. See, greed is the devil when it comes to investing. That's the key message for today. Greed is the devil. You can make your money without being greedy. You don't have to be a hardcore capitalist. Just make your money and think about what can go wrong. So greed will cause you to overinvest. You don't have enough put aside for a rainy day or to protect your portfolio in case something goes wrong. And then what happens is something goes opposite the direction you think it's going to go. Next thing you know, you got a margin call, and Robinhood or whatever app you're on, they're like, okay, your margin call, you got to either put up some cash to protect your equity, or you're gonna have to sell, buddy. This ride is too expensive for you at this point. So if you have some cash to the side, like maybe 10% of your portfolio, I keep 10% of my options portfolio because remember, with Prime, I have that one portfolio that's just about stock options. That's it. That's all I do is sell options and generate my cash flow. I keep 10% of that money in cash. Even if I'm tempted to go buy stuff, even when I see stuff cheap and I'm like, oh gosh, I want to buy it, I say, no, boys, keep your cash because if something goes wrong, you're going to need that cash to bail yourself out of a margin call. So keep that cash to the side. That's my 2 cents, not investment advice, but this is just what I do. All right. And by the way, anybody who wants to join us in Prime class, just you can go to drboyceprime.com to see what's offered there. It's a lot of good stuff. But the best way to get in at a discounted price is go to boycewatkins.com. There's a training called How to Make Money Without Working. At the end of that training, I give you discounted access to Prime. So if you'd like to join us, it's a great way to generate income. I don't know why more people don't do it. It's an awesome way to make money. Just ask anybody who's in the class. I think they'll confirm that for you. All right. So let's see. Kim Hitchcock says just one day for the A, B, and C. No, Kim, it's going to be the whole weekend. It's going to be Friday, Saturday, and Sunday like usual. I hope it doesn't say one day. It's October 20th, 21st, and 22nd. I think if that's Friday, Saturday, Sunday, I should probably know that by now, right? So well, I don't know. But yeah, it's going to be basically 3 days, right? So let me see here. I'm looking. October 20th is a Friday. Yeah, 21st, and 22nd. Two more questions. Your thoughts on LICY. I think we talked about that, Danny. I don't remember. I'll look it up real quick again. But I think we talked about it. I think I didn't like it, but let me look again. So IRA, it's an IRA account, so no taxes, thankfully. Okay, good. All right, great to hear that, Vince. All right, so yeah. I mean, the tax deferred stuff, you got to take advantage of that. It's extremely important for wealth building. All right, so let me see here. LICY stock. That is Lycicle Holdings. It's a $5 stock. Year to date, it's made a little bit of money, 5%. It looks like a tiny company with a market cap of less than $1 billion. It looks like they're partnering with a company called Glencore to build the world's largest lithium battery recycling hub. It looks to me like it's a long shot kind of company. If you're looking to generate income by selling the options or something like that, I don't know what the options market looks like for LICY. It's probably not that great. I'm not really inspired by the stock, but I wouldn't necessarily see it as a bad investment. But I would say, generally speaking, you know, remember, don't marry. You don't marry stocks the way you marry like a person. Like my wife is, my biggest emotional investment, right? That's the ones I'm riding that horse to the end. And she's not a horse though, but my marriage is the horse, not my wife. But I think that with stocks is kind of the opposite. You don't want to overcommit to any one particular asset. You want to be diversified. So if you like LICY and you want to be in that business, go ahead and buy you a few shares. And then maybe the next week you get a little extra money, buy a few shares of something else. That's kind of how I do it. I shop for stocks every week the same way you might shop for groceries or shop for shoes. What else are you going to do with your extra money? I mean, you're not going to spend it. You don't want to spend it. You want to preserve it. And here's the other thing. Last point I'll make on this is, and then we'll be done for today. Is I know people don't invest sometimes because they're afraid of losing money, or they're afraid of their investment not giving them more money than they put in. They're afraid, like, if I spend $100 on the stock, if the price goes down, it'll only be worth $90. Then I'm going to be mad because I lost my money. But I would ask you, if you don't invest it, what else are you going to do with that money? You're going to spend it, because if you spend it, then that $100 will turn into zero. You're guaranteed a negative 100% return. But at least if you invest in stock, even if you bought options, you never know that the thing might go up. You might have more than you started with. And then on top of that, let's say I invest $100 now, and I just don't touch the stock, and then 5 years later that stock drops in price from $100 to 92. At least I have $92 to show for the $100 I had 5 years ago. Think about this. How much money? Imagine if you could go back in time to 2018 and just have 20% of the money that you blew in 2018. Like, imagine if you went back to 2018 and let's say 20% of the money you wasted had just been invested. Think about how much better your life would be, how much happier you'd be, how much more cash you probably have, right? Because we all waste money. That's what we're trained to do as Americans. We're trained to waste, spend. And that the system trains you to do that because the system needs you to do that. The system needs the consumer. The system needs people to spend. And thank you, Kim, for happy anniversary. Our anniversary is on the 21st, actually. So thank you very much, so Kim. I appreciate that. So the system this teaches you to do that, but that's not good for you personally. So I would encourage you to spend as much on stocks as you do on, other stuff. That's what I do. So and I think it does work, because at least you have ownership in something. And ownership is the key to power. That's the 10th commandment in the book, the 10 Commandments of Black Economic Power. So feel free to grab a copy. Also, if you want to join us in Dallas, just go to boycewatkins.com, and the link is right there. And I think that's everything. I think it's everything I want to talk about today. So I hope you guys had a good class. And I will be back next week, next Tuesday. We'll do Stock Market Tuesdays. And if you have a question you want me to answer specifically, you want to make sure I get to it, log in at theblackstockmarketprogram.com, and you can leave a question for me, and I will answer your question specifically. And also, those of you that want to join us in Prime class, just go to boycewatkins.com, look for that training on how to make money without working. At the end of that training, where I talk to you about how people are generating insane amounts of income from selling stock options, at the end, there's an offer if you want to join us in the class, and it's well worth it. So, all right, so have a good day, everybody, and we'll see you later. Take care now. Bye-bye.